Hello everyone, welcome back to another video, and today we are going to be looking at examples from price action today, December 12th, 2023, and how we had some great examples of algorithmic order flow utilizing time and price. So concepts we're going to cover in this video: macros, time distortion, order flow, high probability inversions, change in the state of delivery, dealing ranges, and KRP, key reference point, X macro model from my previous video. All of these things were right in the charts today alone. So this is the daily chart on ES before today's open. And you can see the yellow box. I want you to focus up here near this siren icon. We had this liquidity void. So there was no trading, not even a wick, between these two candles here. So that's a liquidity void. There's no trading. So that's a powerful draw on liquidity. Now I want to talk about the 4-hour chart. Again, this yellow box up here is that daily liquidity void. Focus down here on the dealing range low. Why am I anchoring this as my dealing range low? Why not this one? This, I'm refining it as my dealing range low because we've already had IOFED, institutional order flow entry drill. So best case for longs, this target still hasn't been met. It hasn't been completely filled in, the daily liquidity void. We don't want to see that get taken. Best case in terms of confidence, right? Speed, when or if we're going to continue higher and indeed get that buy side objective. So I'm anchoring my dealing range low on the 4-hour to this low. This is the dealing range high. Where's equilibrium? This thick red line here. I want to make that apparent in this visual because if we're long, what do? We look for PD arrays or key reference points below equilibrium in a discount of the dealing range. This 4-hour chart, what's the PD array? This BISI. What would the key reference points be? The high, consequent encroachment, and the low. So now we are down to the 1-minute chart. And I'm going to walk everyone through this order flow here and how we can see time and price working beautifully today. So first of all, we have the CPI release up here at 8:30 a.m. New York time. Do we completely fill out that daily liquidity void? No. We come up to consequent encroachment and then sell off. Now, the first thing I want you to focus on is the 850 macro, and more specifically, this SIBI here, this 1-minute SIBI red box that I'm referring to here with my cursor. During the 850 macro, when we expect a spooling of price to liquidity or inefficiency, what do we get? What occurs? We have this SIBI formation that sends us down to our key reference point, 4-hour BISI low that we discussed in the previous slides. So the 850 macro is utilizing a PD array to send us to a key reference point. Now, this is going to be important in a second, but I want you to focus on this now. The inception of this move, of course, it started up here at the CPI release, but during the 850 macro, it began to move downwards. Then what occurred here? We had this little SIBI here, rejection off consequent encroachment to the tick, that sent us to this key reference point. So this SIBI and this SIBI is of interest to me. Why are those SIBIs of interest to me? Because they were the PD arrays, the inefficiencies during the macro, especially here, but this SIBI as well, that sent us to our sell side target, a key reference point in discount of our dealing range, that 4-hour fair value gap low. Now, do we see respect of this 4-hour fair value gap low? Yes, to the tick. What occurs? We're finding support off of it, and we're entering what time? The 9:50 to 10:10 macro. Now, recall what I already stated. This SIBI was utilized to send us to this key reference point. So what does that make this SIBI? It makes it a high probability inversion. So the PD array that's used to send us to a target, key reference point, inefficiency, it's higher probability that it's going to be used as support in this case once we close above it because we're bullish. Now, on top of that logic, below the inversion here to this low, where's the inefficiency? There is none. So we should think it's reasonable for price not to have a reason to come back down here. By extension of that logic, this low should be safe. It's already delivered to our key reference point. But see how we delivered from this SIBI to our key reference point. Then we enter the 950 macro where we're expecting that spooling to an inefficiency or liquidity. So if this is a high probability inversion now, that was once a SIBI, what does that make closure above this SIBI as? That's that change in the state of delivery. The SIBI was used to send us lower before. Once we close above it, it's the change in the state of delivery because the bodies tell the story. The algorithm's closing above it. It's not showing respect anymore as resistance. So these are the initial footprints, the initial signatures that we could be reaching for at least a short-term premium, internal range liquidity, inefficiency, and premium. And you can see here, where do we reach to? If this is our high of the day, and we're suspecting that this is going to be the low of the day, where's equilibrium? Right here. We're long. What do we want to target? Liquidity and inefficiency above equilibrium. So we get that first partial here. And that same logic that I used with this SIBI, I want to use it this SIBI. Why is this one more important? Because it occurred during the 850 to 910 macro. And again, it was the one that was used, the inception of this move down to this key reference point. So once we close above this here, that's another change in the state of delivery, further confirmation that the algorithm isn't respecting that SIBI that was formed during the 850 macro and sent us to the key reference point as resistance anymore. So that makes this orange box here a high probability inversion, just like this lower one that we already described. So real quick, before we continue on the lower time frame, I want to zoom back out to the 1 hour chart. And you can see here, I've refined the 1 hour dealing range. So this low was our 4 hour dealing range low from earlier on in the video. This low was the low that tapped into the 4 hour BISI low. So you can't see that 4 hour fair value gap here, but it's that 4 hour fair value gap low, that key reference point that we already tapped into. So I'm refining it here because we don't want to see that broken again. So the dealing range high stays the same, but I'm refining this low. So I'm getting equilibrium from the dealing range high to the refined dealing range low on the hourly. Right here, this red line, what's right around and right below equilibrium? This fair value gap. So keep this in mind when I'm referring to it on the next slide. And now we are back down to the 1 minute chart. So we still haven't gotten our targets, the high from the CPI release and the high of the daily liquidity void. This, look here, is that 850 macro inversion. For all the reasons we already described, this should be high probability inversion. So it should offer support. So what occurs at the 1050 macro? Right at 1050, we spool down, sweep these lows, dig into this order block and the bottom portion of this inversion. Do we reach the bottom of the inversion? No, that's what we want to see. Look at the bodies. The bodies are closing above consequent encroachment of this high probability 850 macro inversion. Going forward, you can see we got that, what would have been a second partial, the inefficiency in premium from the first slide on the lower time frame. And now I want to focus on this chop, accumulation, consolidation, whatever you want to call it in here. So when is this consolidation occurring? Between the 1050 macro and the 1150 macro. If we expect the macros to be the time period during the day where the algorithm is going to seek liquidity or inefficiency, wouldn't it be more reasonable to expect accumulation, consolidation before macros? Okay, it's coming after the 1050 macro and before the 1150 macro. So it's between these two macros. Now we enter the 1150 macro. We leave this buy side, the highs from this consolidation. We leave them, right? Remember, we're bullish. We're leaving this engineered buy side liquidity. And what are we doing? The 1150 macro is sending us back down into what? Look on the right side from the previous slide, that 1 hour fair value gap low. We go beyond it just to a tick, but we're coming back down to sweep the low from this consolidation range, right? When we were in time distortion. So the 1150 to 1210 macro was utilized to send us to this key reference point, the 1 hour fair value gap low. We deliver off that, and what occurs? We immediately start seeing these premium PD arrays fail. This SIBI here, this bearish order block, we're attacking that engineered buy side liquidity, which we would expect because this 850 macro still is offering support, and we're tapping into that 1 hour key reference point. And to bring it all together, we did in fact continue higher and complete the fill of that daily liquidity void, as you can see here. So thank you guys for watching. I hope you guys enjoyed this video. As always, make sure you guys follow me on Twitter at RealTraderTim, and you are subscribed here on YouTube. I will have more videos in the upcoming future. And I also have one-on-one coaching if you want to book a session with me in the description. I will talk to everyone soon. Take care.